Okay, what's going on? Good evening. This is going to be a recap from the New York session today when it comes to NQ. Today is Tuesday, the 28th, October 2025. And what I want to go over is the New York order that we took today for NQ. And what I'm going to do is I'm going to have a comparison of kind of showing you guys a little bit of like QQQ and SPY and how I use those at my advantage for the comparative strength analysis. I'm also going to show you guys like ES and what I've talked about on like my Instagram and my TikTok about how to increase your edge and thinking in probabilities when it comes to ES setups and NQ setups. Now, I'm not going to go over the YM today, but it's relatively the same. So NQ is pretty much, a typical day for us and how we like to look for draws and liquidity, points of interest, special areas, stuff I'm going to be going over more in November on special areas for you to look for. So one thing I was told was that the real teachers, they don't tell you what to see, they show you where to look. So the whole goal of this video and this session is to show you where to look, show you, a good idea of what you want to think and how to do it and probabilities from experience and see if you guys apply some of these things and see if they work. Now, this is also a video that's not to prove anyone wrong. It's just to show you guys that there is a way to do it better, and there's nothing wrong with that. Okay. And if anyone is seeing profitability from inversion setups, which I'm gonna go over, then awesome. But I'm going to show you guys today that if you look at it from this perspective, you're going to increase your edge, you're going to increase your win rate, right? Your profitability overall. And I think you'll start to notice the nuances in these targets tend to happen over and over, okay? So I'm going to go ahead and share my screen here. Take myself off here. And so really quick. Okay, so what we're going to do actually is we're going to go over the NQ setup first. And so looking at NQ today, if you guys follow my Telegram or if you're in the Discord, what I talked about today was this was our scenarios. Okay, we wanted to see, since we've been getting nothing but bullish price action on higher time frames and we just keep pushing and rallying higher and higher, we have two scenarios, right? We wanted to see a little bit of pullback possibly to the 950s if they were going to sell off, and that was going to be price basically going below, right? The low of day. So as you guys can see here, this is a 15.5 1 minute NQ, where I'm going to keep most of my focuses on these two here, right? So the 15 and 5, because that's where I like to take a lot of my executions. And so when you look at New York Open, which would have been here 8:30 a.m. Central Time Zone, if you think about the overnight price, right? Like I always think of the market in three phases, and I want to know what overnight does so that I can kind of have an idea of order flow if those people are starting to take profit or if those people are going to can just continue the price even higher. So if you take a look here, this was the daily open, right? For NQ, 6 p.m. Central Time Zone here. Excuse me, 5 p.m. Central Time Zone here. And overnight price, people get bodied, right? So they just kind of drag price out through here, right? I like to look at it here on the 15 because I'm not even going to look at it until I wake up. And then if you look at the London Open, which is a massive, time where traders are going to come into the market, price came and made a low on day, right? 25,950, let's just say around that area. And so now, before we even get to New York Open, which is here, right? We ended up seeing price, which we had a high on day, which would have been here, and the previous day high was here. But that high on day was here, and we seen price closing bodies above that area before New York Open, showing signs of strength, right? Then, if you look at 8 a.m., which would have been here, so this is still pre-equities open, right? You have price exploding, right, through these highs, right? Taking out more sell side liquidity. And so for me, what I wanted to see is if we were going to continue, was I wanted to see price set up a specific way with demand to continue higher. Now, when price is already making new highs before equities open, a lot of times they're going to sell it off, right? So for me, what I did here is I watched New York Open. This was 8:30 to 8:35. We ended up closing a new high. and I looked for price to come back down to this area to frame up something off of here to maybe go higher. That ended up not happening. And then they end up closing, right? This candle right here on the 5 minute, lower low, right? So that's a sign of weakness in my eyes, right? And then when you see price shoot back up 8:55 into 9 a.m., right? The bodies of the candles could not close any higher than this area, which indicated to me that they may want to go sell side, right? And they may want to come back into the initial balance, the daily open, and possibly the low of day, right? So ended up taking a short position to start the day, right? It was around 9:15 a.m. Had about a 20 handle risk on that trade. And when we broke this low, so let's say you took a trade in here, it was a 26,070s, right? Took a trade in here, had a 20-point risk. So it kind of looked like this to make it easier. All right, we had this area here, and I had a 20-point risk. So it was like somewhere right in this area is where I had my risk. And then I was looking for price to get below here, and then target was daily open for a 1 to 3, right? Now, when price, for example, start new, when price comes here, right? I have specific rules that I use when bodies start to close below old lows, right? So price came down and that candle closed. Now I had two contracts on. What happens for me at this exact moment is one of my contracts risk went here, right? And my other one went break even, if that makes sense, right? So then you can see that as price started to not go lower, I started seeing like, wow, I don't really know if these shorts are going to work. And what I always tell people is shorts are short-lived. Now, the trailed risk on this trade from here, we had moved down to this down candle when it had presented. So it took us out of one, and then I had moved one to New York Open, and I seen this massive 5 minute candle just print defending, right, the demand candle area, right? It's on the 15th. So you have to be looking at higher time frames to understand this stuff. And so when I seen that, that took us out of the shorts completely. We were done. We had a small profit, was going to walk away for the day. Now, and I'm going to get to the inversion shorts, or the inversion plays and all that here in a second. So at this point, right, we're out of those shorts. We had a small profit. I thought the day was going to be over. Now, what I ended up doing, and I'm going to also show the 1 minute for some of these, right, was we ended up getting this candle here 9:45 to 9:50. Now, I like to take most of my executions in the first 15 minutes of an hour or the last 15 minutes of an hour. So if you see this 5 minute candle here, this is what made us decide that we didn't want to be in the shorts, because I could see that people, they were defending the price and they weren't even touching the daily open, which is something that I've, just from trading NQ a lot, I've come to realize, what's going to happen if they don't get to that level. So now, then when we got this level here, this 5 minute, 9:45 to 9:50, I was ready on a 1 minute setup, right? Because you see how this candle closes and shows strength? That's a signal for me. Now, what I like to see on that 1 minute is it come back and test the demand candle, and then I wanted to play back up, right? If that makes sense. Once we tested down, like right here, I wanted to play that back up to take that New York high, right? And that high of day. And so there's a mantra that I live by and I have here on my desk. I always play with about 2 contracts to 4. So let's just say hypothetically, like I said, I got in here. It looked like this on the buy side. The risk was nice, right? It fits my game. We'll talk more about thinking and probabilities. And when price got up to the New York Open and it failed to go higher, what I do is I call it protect or pay yourself at point of interest. So the 2 contracts that I had on, when I seen price hesitating at New York Open, I pulled one contract and left the remainder, right? Left the remainder with the accepted risk, still wanting to target the 26,100 level, aka the New York highs. Right? Now, what happened after that? Right? They came down at 10:35 and took out by a tick, right? Took out that remaining trade, which most people would freak out and start to sell that position. But because I realized that they didn't go back and take that daily open, like they never tapped that area, it's just something that I know from trading this, like I said, point of interest player. What I noticed next was all we did was swipe that 1 minute low. And then what'd you get again? You got another engulfing 5 minute candle, right? And the right time. Now this was 1035 to 1040. Now I like to take them in the last 15 or first 15. So the next candle after that sign of strength, and we also had a shift in 1 minute price delivery, right? So when you look at the actual price action, it's closing higher here on the 1 minute. That's a sign to me that price still has the willingness to go higher. Now, what they ended up doing after that was they pulled back into a demand candle, right? So this to me is considered a demand candle. So I started to frame up this area, and I'm going to go over what I was seeing on ES at the same time here in just a second. But when it comes down to this candle, this is 1040 to 1045. Then we had 1045 into 1050. Then we had 1050 into 1055, and then 1055 into 11. You had the shift in price delivery on the 5 minute, right? Now, I want to make sure that I'm getting my entries inside the accumulation, inside the demand candle, and that I can frame up edge. So after this candle, if you guys go back and study this, 1045 to 1050, when that candle closed, I started to attack the demand area. So this candle closes 1045 to 1050, then you have 1050 to 1055. As long as it's still inside this candle here, and I just want to make sure I'm referencing the right candle so you guys can see. This is the demand candle, okay? As price is inside that candle, I want to be framing up my edge using what's called a prior bar low stop loss placement. A lot of the times people will show you different entry strategies and they never show you a probabilistic stop loss placement. If you learn anything from me, that's what I want you to learn. Now, what do I mean by probabilistic stop loss placement? That means that when I take an NQ trade, I like to go 15 for 45, which is going to be a 1 to 3, or I like to do 20 for 60, which is a 1 to 3. Okay. And so looking at this setup right here, we had prior bar low, which was here, and that fits my game, right? Now I also like to look at like an A plus, B plus, and C plus setup, and like a B plus setup as well. Now an A plus setup for me is a 10-point risk for a 50-point gain with a break of structure in it. So if you're taking this and you're placing your risk under prior bar low and you're attacking the New York highs, that's 50 risking about 10 points, right? So let's just give it 15 to be safe, right? So you're still at that 1 to 3 ratio for the risk reward, right? So this was looking like a really good setup for me. I don't really even have to look at a 1 minute to take a setup like that because your risk is going to be your risk no matter what, okay? Now, a little bit more risky for me because, like I said, they did draw on that liquidity earlier, but using that New York low and understanding that people got stopped out and probably started to sell breakouts to go lower, and then seeing that sign of strength is what gave me the idea to take this up to that New York high. And then as price presents specific things in an uptrending market, I'm able to use my trade management strategy as I go higher in price. Okay. So that's kind of how we found the entry when it comes to the NQ today. Like I said, sometimes you have to take a loss to be a boss, but also it comes down to how you set up your trade, right? So again, I'll go over that first one. The first trade, what we seen price come down. We were hesitant because we were in shorts, wanting price to go take this like W pattern. It looks more like this looked like more of like a liquidity type of spot for me today. But once we seen price not be able to close back in the initial balance and close below the daily open, that's what gave me the idea that my short, right, even though we had closed lower low, we came up, we couldn't close any candles higher than these, which were making lower highs. That's where we ended up taking that short. Once we seen that it wasn't going to go any lower and take any more of this overnight liquidity, that's when we had pushed our risk on the shorts down to here and pretty much knocked us out because shorts are short-lived. Now, 5 minute strength, that's something I like to see. It also fits our time frame, 945 to 950. That's what made me decide to start looking. And then it spikes down perfectly on the 1 minute. And no matter what, if I'm taking the 1 minute setup or if I'm taking the 5 minute setup, my risk is going to go on that low of day or that current intern low, and then still attack in the same area. So got in there, like I said, that first trade, protect or pay yourself at point of interest, price comes back down, knocks us out of that other contract, and then we waited for another sign of strength. Price came back down, perfect timing here, and seen a sign of strength, then was still inside the demand, was able to put our risk at prior bar, and then off to the races after that. Now, what I want to go over and what I really think is very important is understanding comparative strength analysis amongst ES and NQ. Okay. And so what I want to go over first is the inversion setups, okay? The inversion setup is a late setup, okay? And it's the reason why people take this setup is because they don't understand supply and demand. Okay, so think about this. Just really think about this before you get in your feelings. Okay, so if you look at NQ, or excuse me, if you look at ES here, let's mark the New York Open. All right, New York Open here, right? It's already marked. So this is your New York Open here. Okay, from the very beginning of New York Open, what did you get? Sells. Now, what I want you to ask yourself, the question is, if you sold here, where are you going to put your risk? So what I mean is, where are you going to put your stop loss? Probably at the New York high, right? Now, why does price turn around and then come back and make a new high and take out this New York high? Well, you got to understand, right? As we're watching NQ at that same time, right? Price was coming down on ES and it was wanting to deliver the overnight low, the low of day, 69.02. But at that exact moment when they took those lows here, right? What you're getting is buyers stepping into the market. Now, think about the timing that I said, right? 10:45 to 11 a.m. So the first 15, last 15 minutes of an hour. As I'm watching this at the same time, I'm seeing the sells cover. That's what you're starting to see. Because here's the thing, think about it. If you had a sell position from 69.25, you're putting a buy limit here, right? Right under these lows, most likely. I would think, right? If you're selling and you're selling down ES and you're looking for like 30 handles, I mean that's a lot on ES. So buy limits were sitting right under the lows, right? If you're looking at like a book maps or anything like that. But for some reason they didn't go and take that low, right? So now why I say inversion trades are late, right? Is because you got to read supply demand on 15.5. You have a dump candle and then you're followed by 10:45 to 11, you have an engulfing 15-minute candle. Now, people will tell you on an inversion trade to get in right here, right? They're like, oh, get in right here, put your risk right here. Now, why do I say that this is not a bad trade, right? But it's not the best trade. It's not the one you're going to want to really take and have your eyes on. You want to have your eyes when price takes the old low here and then starts to print and shift in price delivery, right? So if you notice something right here on the 5 minute, 10:55 into 11, what do you notice here? That price shifts in price delivery, okay? Now, if you're thinking about this as a demand candle, so this 15-minute candle, 10:30 to 10:45, let me show you something that I've been doing for 2 years. If you take a trade on an inversion setup, you see where your entry is, where it shows up on the 15, you're outside of the demand zone, right? So as you count from risk to entry, you have a lot more that you could lose from taking it here. But if you focus on the open of that 15-minute candle and the shift in price delivery at the same time, right now, when you look at that entry, one, you can condense that risk down, right? So even if you get it when the 5 minutes popping out here, what I like to do is I like to see, like for here, like I told you guys, 15 for 45 is a 1 to 3. And then a good setup for me on ES is going to be a 5 for 15 or 5 for 25 or, something like that on those lines. But the difference is here is the risk placement, okay? To me, it doesn't make sense to wait for price to close back above daily and then you start to take a trade when you don't know if that daily bar is going to actually turn bullish or not. You're kind of putting yourself at risk here, right? And over time, no matter what, you're still looking for this setup. Now, taking the trade at the inversion with the same risk is a 1 to 2. Taking the trade with the 5-minute shift in price delivery and focusing your eyes on the 15-minute location of demand is going to give you an actual 1 to 3 by breaking the first 5-minute high and, right? And you're taking the New York seller's liquidity. And that's what you want to be doing in this situation, especially if you're looking at like an NQ and comparative strength, because as you're taking that New York shorts liquidity, what you're identifying, I believe we're in a bullish market, right? What I think you're seeing here is the seller starting to cover their position. So all these buy limits were sitting at like 6,900. Obviously, price didn't push to that level. Price starts to show a shift in price delivery. and then buy limits just start to fill after this to flood the price back up. Now, granted, this price right here, 11:30 to 11:35, so like that, like right around that time, there was a Trump tweet that also was an excuse to push price to hurt traders. But when you think about just everyday order flow, um, this was a really clean setup. And like I said, I'm not saying it's not going to be a good setup to take here. It's just way more risky to take it here. Okay. And essentially, like what I like to do when I take a setup like this, I like to have the current low, so where they swept the low as my risk. So if you took the breakout trade, and make sure you're looking to the left here because I'm really gauging this off location and demand, right? You're able to frame up a better setup in here, like a 5-point risk, if you're focused on 15-minute demand, and then if you're also focused on the 5-minute demand candle, okay? So this isn't an institutional candle, I just want to use it for the purple. And so now you can actually use edge, right, to define or defined edge into your setup and still have the same target. So let's go over this one more time so you guys have an understanding of what I'm saying, okay? Is you can have two different orders. You can have this one where it's a guess on your risk, and you're still gonna either put it at the low of day, or the current intern low, or the lows here, 6905s, or right, you can focus on 5-minute, 15-minute demand setups, okay, and get your entry in here and actually have an edge risk that's gonna take you to a 1 to 3 on the first break of structure. Okay. Now we don't know how high the markets can go, like the 6950, stuff like that. But the one thing I can say is that, from doing this for a long time, to increase your edge and to increase your win rate, and like I said, your profitability, what you're going to want to do is identify the low sweep, right? So the low sweep, which I'm going to go over in another video, like my entry strategy, but the low sweep and then understanding order flow, right? Those shorts start to cover. They're not getting like essentially what those shorts want in this situation is they want price, right? From here to go here like this. And then as soon as it breaks lower, the buy limits fill, right? And then you'll see price usually fly from there. But that's just not what they did today, which is fine. But you have to be able to understand once this price does this here and breaks out of that area that you want to start attacking, but you also want to start attacking like not too late because you're going to take yourself out of the demand zone, which as soon as you do that, it increases your risk. Okay. So now think about this. When you think about price action and how price is closing, price comes up, right? Move this, price comes up and closes back above daily. Now, even if, like I said, if you buy this right here, I don't think it's a bad trade, okay? But I'm just showing you the difference in entering here, right? And inside this area here where you would have a risk of 8 points. Now, let's say you also wanted to put your risk internal on the turn, which would be here. This would put you at a 6-point risk. This isn't bad, but I want you to go back, right, for me, and look at 15 5-minute setups and tell me if you can find a way with 15 and 5-minute demand plays to increase your risk by letting the risk, so counting from risk to entry and looking for 5-point risk for 15-point gains, right? On ES. And I don't trade, I look at ES every day. I don't trade ES every day. Okay. But I can tell you this, if you're wanting to do funded challenges, any prop firms or get any payouts, you're gonna have to start thinking in probabilities. And the only thing you're really in control of, especially when the market's, very parabolic and going crazy, is what you're actually risking every day. Okay. And so, like I said, in Q, I'll go more over my entry strategy with that. But most of the time, I'm looking for 15 for 45 point risk trades. And then that's like more of like a B setup. And then a B plus setup is going to be 20 for 60. Okay. And so most of the time, like I said, I'll shape this one up as well. It's going to happen on a 15.5, right? So you got to understand supply demand. You got to know where to put your risk, which, like I said, I'll show more of that. But prior bar, like if you're using 15-minute, this is the prior bar, and then just breaking that first 5-minute high, you guys see how that's a 1 to 3? You can win a lot. You can be profitable off of that if you follow that system. Okay, you don't even have to get the full swing of the move, right? There's more to the management of this, but I'm just kind of giving you guys an understanding of there's nothing wrong with inversion setups. They're just not the sniper entry. And most of the time, people that are teaching those entries have no idea what they're trying to do with their risk, and they're just putting it anywhere on multiple setups. Okay. But let's just say this, if you took 10 setups on ES and you're thinking about being funded or being profitable just in general, um, you're not gonna do that by having like an 8-point risk here, 10-point risk here, 7-point risk here. You're gonna want to be in control of what you're risking and what you're putting up on any given setup. So let me know in the comments or DM me personally if you guys are starting to notice this, and go back and study some of these entries on 15.5, especially with ES, or like I said with NQ, which you can go back in the video and see what I said on what you're looking for there. And let me know what you guys think. But also I want to bring up this document. Let me see if I have it here really quickly, of an idea of an image that you'd want to use. Let's see here. Okay, let me do this. Hold on. Okay, so let's see here. So I'll actually save that document for the video, but this is another example of it. I'll just kind of show this one because I can't find the other one. But this is what you're looking for. Something like this, okay? You're looking for price to take that low, right? Show you that the buys are in, give you a risk placement low, entry, and then on that first break, most of the time on an ES setup, if you're going 5 for 15 and like on NQ, like I said, 20 for 60 on a 5 minute, that first break's gonna give you a 1 to 3 R, right? So it actually, here's another one actually. This is the better one that I like to use, okay? And I'm gonna break this one down in steps. But when price breaks that low, right? Most people try to buy the jackknife, price rallies in their favor, then they trail their risk up way too early. They get stopped out. Price runs in their favor. Does that happen to you? Right? If that does, definitely leave something in the comments and I'm going to go over how you can eliminate that from happening. Right? But if you can see on this entry here, that's essentially what's happening to people here. Okay? They're running the lows. That's step 4. They're pushing price back up. And then people are waiting to play this play. But what they don't realize is happening is it's happening right here. Like I don't pull up a 1 minute because I understand what's going on. But in this same situation, what you're looking for, like I said, is that one sign of strength after they take the old lows, the shift in price delivery, and then looking left to make sure that you're positioning yourself inside the demand to then get to that first 15 5-minute high. And if you can go back, okay, this is the last thing I'll say on this. If you can go back and study 15 and 5-minute setups and look for these special candles, and you can frame up 1 to 3s just on the first break of structure, then you know you've got the right setup, right? I've taken a lot of these setups to know, but I promise you, if you guys go back and look at these ES setups, these NQ setups, let me know what you guys think. So I'll make more videos on the entry strategy and just kind of going over probabilities and targets, why we target these special areas. But one of my specialties and what I do is what's called capitulation bounce. So essentially all that is when the market sells off. So like for example here, right? When the market sells off at New York Open, kind of like it does here on ES, right? You have markets that kind of go like this, right? Boom, sells off at New York. What I have the understanding is when price takes an area of liquidity like it does here, right? What's happening, just so I can make this clear, right? You took a short in here, right? What's happening when you break that structure? I'm going to show you guys again. Buy limits, okay? These are what's happening down here. Buy limits are sitting at the bottom of the market under breaks of structure. Okay. Now, most people don't know what high and low is, right? So you got to know where that daily is. You got to know how to play point of interest. But what's happening here is and I said, ask yourself, if you were short here, how do you get out of this market on futures? Okay. A buy limit. So buy limit fills, and then what happens? You see price rally, right? Starts to build and rally and takes out what? The people that don't have the understanding of what's going on. Okay. So just tell me how many times that's happened, right? You forced your way into a short, maybe an equities open, price delivers some liquidity, you never trail your risk, and then price eats you up. Guys, that's capitulation bounce. That's short covering. It's one of the funnest and easiest plays in the marketplace. Okay. So if this helps you out, let me know. I'm going to drop more videos that are like how-tos and, like I said, entries and understanding capitulation bounce. But with that being said, I appreciate you guys watching this, and have a good night.